let's move on to Yahoo. And I had said on the podcast yesterday that the first 78 questions during the conference call were going to be about the sale of Yahoo. And we'll get to that. But anything stand out in terms of the quarterly results, Maddie?
Not really. Unfortunately, more of the same. Revenue was down 11%. The search business continues to suffer at Yahoo as it has for a long time. Paid clicks were down 21%. I was looking back. Marissa Mayer, she's been at Yahoo almost 4 years, and if you look at back in 2012, Yahoo's revenue that year was just under $5 billion. Well, the revenue of the last 12 months, $4.8 billion. So it's slightly down in 4 years. And you think about all the changes, the moving parts, the acquisitions, and to really not see any kind of revenue growth is pretty astounding. This is a business, that generates a lot of cash, about $1 billion per year in operating cash flow, which is why, of course, we'll get to it, why there's interest on the acquisition side. Still about 1 billion unique visitors per month to Yahoo properties, which is impressive. And of course, you've got the 15% stake in Alibaba still, big position in Yahoo Japan. There's value, there's assets that people want, and there's a business that's still generating a lot of cash.
Over and over on the conference call, Marissa Mayer communicated a very clear message, which is we are taking this sale very seriously. And when you look at some of the operational moves that Yahoo has made in the last 3 months, it absolutely looks like they're walking the walk on this one. They're shutting down offices in different locations. They are closing down different verticals that haven't been as strong as some of the other ones. Yesterday we talked a little bit about Yahoo Sports and Yahoo Finance being among the stronger verticals. So I think Verizon's the lead horse.
I agree.
And what has Verizon done in terms of acquisitions in the past, in terms of how they go about them? Do they just write a big check? Is there stock? I'm trying to think in terms of Yahoo shareholders or anyone who's looking at this thinking, well, wait a minute. If there is the value there, maybe I should buy a couple of shares of Yahoo just because maybe they do get bought out at a premium.
Well, we can use the latest example for Verizon, right? When they acquired AOL last year, similar business to Yahoo. They paid all cash, $4.4 billion. I think it was a $50 takeout price. And so AOL shareholders got a nice return. That business had kind of a renaissance there for a few years, and they got a buyout price from Verizon. Can't really do that with Yahoo. I think Verizon is the clear leader. They bought, if you look at why they did the AOL deal, it was really to expand mobile video advertising, and they can do that. They can do a lot of that with Yahoo as well. But Yahoo's, of course, got a $35 billion price tag on it right now. There's going to have to be probably some premium beyond that, given the number of players we have sort of in the acquisition hunt right now. So, and Verizon just doesn't have the balance sheet. They're a huge company, but they'd have to take on a lot of debt to do an all cash deal in this case. So I think they'd probably pay with some stock if they were going to do the Yahoo deal. Whether or not that is appealing to Yahoo shareholders, I don't know. I have to say, just reading about sort of the soap opera of this acquisition, it reminds me a lot of Dell a few years ago. I just feel like Dell dragged on. We knew Dell was going to go either be taken private or be acquired, and there was players coming in and out of the deal. You had Carl Icahn who got involved at some point, and eventually, of course, it was taken private. And I wonder how long this is going to drag out, just given the number of interested parties and the diversity of what people want to do. Either you acquire the whole company, acquire just assets of Yahoo. It's going to be fun to watch out. Maybe not fun.
Well, and when Simon and I were talking earlier this morning, I thought of sort of the sports analogy where one team is looking to trade for a star player and the opposing team says, okay, we'll trade our star player, but you got to take these 3 other players too who aren't as good and they have bad contracts, and
take those contracts, give us some cash.
And that's the thing. I'm sure if you're Verizon, you're looking at Yahoo and you're just thinking, can we just take these segments? We're looking for, it makes sense to me that Verizon is looking to add content to their pipes. So looking at Yahoo Sports, looking at finance, looking at some of the other verticals, but if I'm Yahoo, I'm not just selling Yahoo Sports.
No, and then I think to your earlier point was good. I think Marissa, say what you will about Marissa Mayer, she's gonna, if she leaves this year, which is most likely after the acquisition, shareholders since she came in have actually done pretty well. I think Yahoo's probably about a double in stock since she came in. It's kind of underperformed the market recently, but I think she's done a good job. She certainly has a shareholder mindset, and so I think she is positioning the company, as you said, for a full sale of the company. And she wants the highest price she can get for shareholders. Obviously, why wouldn't she? She has a lot of shares herself.
Yeah, and the point like you were making, Chris, everybody is competing for our time these days, right? Like you can only check so many apps or go on so many websites every single day. Yahoo has the right strategy. Marissa Mayer had the right strategy all along of being, hey, we want to be a part of your habits on a daily basis, and we're going to build the products around those. I just think Yahoo was in a difficult position because they were so far behind that transition to mobile, where everyone was checking apps on their phone. Now, I do check fantasy football quite a bit during the season, I will admit, but I just don't think that Yahoo was as established as they wanted to be in your daily habits.